Ken Chapman from Mortgage Tree, and I'm your mortgage broker. I've got 30 years of experience in the industry, and we know the market, we know the lenders, and we know what the best rate and options are for you, and to be able to ensure that you have a successful mortgage experience and many happy years in your home. Your Shane Homes representative will tell you what date is closing. We have to provide that document to our lender, and they will review and do a final check on the file. So what does that look like? They'll confirm that the down payment's been completed. They may re-pull credit. They'll review the income documents, and once that check is done, they'll go off and instruct your lawyer. Typically, the mortgage is refreshed or reapproved when you get to the final stages of the build. The lender will come back and they're going to ask for updated employment documents. They're going to pull your credit, and one of the most important things, they're going to review the down payment and have that finalized. Typically, this can happen from 120 days all the way up to 30 days before closing. Lenders require updated documents before closing to ensure that nothing has changed over the course of your build from when you did the original mortgage application. So just look at it as a final checkup before the mortgage moves to the next phase of going over to your lawyer for instructions. Updated employment letters, recent pay stubs. If there's variable income coming in, they'll want to be able to confirm that. So it could be a T4 if that was received during the course of the build. If jobs have changed, your credit has changed, these are key things that lenders will look at and may ask for some additional information in order to issue that final approval. Lenders really go through this in a fine-tooth comb to make sure that everything is succinct the way the application was originally presented. The best recommendation we have for clients is to be able to provide, depending on which lender it is, either a 90-day or a 30-day history of where the funds are. If funds are not readily available, it needs to be clearly outlined to your broker so they can anticipate and advise you of key timing dates of when they need this information. Some of the big pitfalls that clients have is they start thinking about their down payment 30 days before closing, where that should be addressed probably about 90 days before closing. Because once the documents are provided to the lender and they review it and they sign off, they don't look at it again. So it's something that we highly recommend people stay on top of and get out of the way as soon as they have the funds readily available. Acceptable down payment sources are money that's in your bank account, money that is traceable, meaning that if you're moving money from one account to another, you can provide the statements to support. If it's gifted down payment, having the gift letter that the lender will provide signed by the gifter and yourself, and the supporting documents that show where the gift is coming from and going into your account. Things that you don't do is keep money off to the side that's in cash and have a large deposit put in. That gets questioned by the lenders because they need to prove where the funds came from. Some countries are on non-acceptable lists from lenders. So if a foreign country gift is going to occur, you need to speak with the broker to be able to understand where it's coming from, and they'll let you know what documentation is required. One of the big pitfalls that a lot of people have is they move money from one account to another account, and each time you move money from that particular account, you have to provide a 90-day history typically of where it came from. So when you think about it, it is best to keep your money together in one account so it's very easily presented and transparent to the lender when they need to prove your documentation for your down payment. It's very important you respond right away. The reason being is when you submit documents back to your broker, they have to submit it into the lender, and depending how busy the lender is, it could take 3, 5, 6 days for the lender to review documents, and maybe they have a question or need further clarification on what you provided to them. If documents can't be provided right away, this can cause delays in terms of the final mortgage approval. And delays then have a trickle effect of when the lawyer gets instructed and the lawyer being able to close on time. So what I would highly recommend is that 3 months before closing, to be able to reach out to your broker to go through what are the remaining documents to be able to complete the mortgage, because those documents can be obtained, reviewed, and approved by the lender far in advance to your closing, so everything runs smoothly. The remaining down payment should be readily available in a bank draft to provide to the lawyer between 5 and 3 business days before closing. Your lawyer will direct you on the timing of when that will need to be done. The costs involved will be not only your down payment, but also any legal costs that are required to do the transaction. So when you get your pre-approval, it's a snapshot of where you are financially, and that needs to be maintained throughout until you take possession of your new place. Sometimes life happens and there are changes, and some of those changes to be aware of that will affect your pre-approval can be a job change, can be additional debt taking on. And when you start increasing your debt load, it means your monthly payment starts to increase. And we have to maintain a certain debt to service ratio of your income to qualify. So taking on more debt increases that debt to service ratio, and that can move up very quickly and change the parameters of your pre-approval. Another one is pay your bills. Don't go into arrears at all. The lender will pull your credit, and if anything has changed with debt levels to not paying your bills, it presents a red flag and means that we have to go through the whole approval process again. So in essence, before you take on any new debt, contact your broker and have them rerun the numbers for you to ensure that you're not exceeding the guidelines of the pre-approval. Job changes are a main aspect of the credit approval, and a change that can occur with reduced hours or going from full-time to part-time, or the way you get paid can negatively impact a credit application. So before you make a decision to make a change, you need to reach out to your broker so they can understand how your income is going to be paid and how it will affect your mortgage pre-approval or approval within the build process. The first step is to reach out to your broker. Be able to be forthright and truthful with what has occurred. Telling the truth really allows the broker to be able to understand what aspects will affect the pre-approval that's in place and be able to look at remedies on what can move the deal forward to secure your home purchase. You need to be prepared to move into the house in a reasonable period of time based on what the builder is telling you. Sometimes a build could be moved up 3 months. So when you start the build process, you need to really have a good conversation with the builder, understand timelines, and be prepared for either a delay or moving in earlier. So with extensions on new builds, lenders will look at what their expired credit is for your pre-approval or approval. What this means to you is that if dates are extended, they may impact how your interest rate has been secured or the approval itself, meaning that we would have to go in and get reapproved. Interest rates go up and down, and typical lenders will do a 120-day rate hold. My recommendation is 120 days out before closing that you're in touch with your broker to be able to secure your interest rate, so if there is a rate change, you're protected. Shopping for a better rate has its pros and its cons. One of the major red flags is that going to a new lender, they're going to re-review your application. So if there's any changes that have happened during your build, it could impact them issuing a new approval, and it could jeopardize your existing approval that you have in place. Because lenders behind the scenes all talk to one another. And if something is different, it could cause concern on both sides and could withhold your approval. If an approval amount needs to be reduced before closing, you need to understand why. There could be other options with different kinds of lenders that could help secure your approval, but it may mean a higher rate. It could mean unforeseen options within a mortgage that you weren't expecting, or higher fees that could be associated with obtaining a higher risk mortgage if it was required. When lenders calculate value of your home, it is based on the lower of the appraised value or purchase price. So in the event that the appraisal comes in lower, you need to be prepared to make some adjustments to your mortgage. Your mortgage may change from a conventional mortgage to high ratio mortgage. And high ratio mortgage is when you put less than 20% down. It could mean that you will have to put more of a down payment, providing that you don't exceed the minimum down payment that's required. So my recommendation is, if you think values in the market are generally coming down, you should be speaking to your lender, broker in advance to ensure that the value is going to be maintained for what you purchased, and if it's going to be different, to be able to look at what the options are available. My recommendation is to touch base every 3 months. Provide an update to your lender or broker as to what's happening with the build. Be able to discuss any changes with the purchase price, such as you've added something to the build in terms of a cost, and determine or let them know if you're going to be paying for it or you want it to be part of the financing. A critical aspect is, if you're going to add any changes into the financing cost, you need to go and get reapproved again, and this is what the broker will take care of. So the benchmark I highly recommend is contact them every 3 months. You need to be proactive during your build to ensure everything runs smoothly. When people think about utilities and moving, they think, oh, I can do that a couple days before I need them. With movers, when you're doing a full move, they need probably about 90 days ahead in order to have your date booked. With utilities, you should be getting that set up well in advance, a month before you take possession of your home. That way there's no surprises in the event that there's delays in your application with the utility companies. Having the remaining of your down payment available so you can purchase a bank draft and bring it to the lawyer on time. Lots of clients don't realize you need to be in the country and face to face with a lawyer to sign. So don't plan a last minute vacation and expect to be able to walk into the lawyer a day before closing and be able to sign. Typically signings happen 3 days before, and that appointment is booked 2 weeks in advance. So make sure that you're proactive in ensuring that there's enough time allotted to be able to sign with your lawyer. When you go in to sign with the lawyer, you need to have the documentation ahead of time as to the exact dollar amount that you're going to bring in terms of a bank draft. You will also bring in your ID. The lawyer will send you an opening package. Make sure you read through it carefully in the event there are any additional items that I've not mentioned that are required for a successful signing. I think buyers need to be aware of, on the day of possession date, is to be patient. The money for your mortgage will get advanced by the lender. It could come in the morning, it could come in the afternoon. So if you're organizing movers, don't expect that you'll get the keys right at noon, because sometimes there are delays. I would always recommend planning for a late afternoon move or the following day.